SmallCapSteve Live. I am SmallCapSteve. Really excited. We got a huge guest on today. We got Mitch Baruchowitz from Merida Capital, who's probably the original or the OG. I don't know all the lingo these days. In the MSO world, and knows the space exceptionally well. It's a topic we love talking about, and we could probably go on for hours just chatting about. So really excited to have Mitch on. Later on in the show, we'll get into some of the Canadian junior news. Lots of stuff going on. Biden talking about tax hikes. So I'm sure that'll be fun. So buckle up. Let's get started. Mitch, thanks so much for joining us today.
My absolute pleasure.
First off, the first thing I got to clear on is a couple of years ago, I actually used to troll you on Twitter over MedMen. And it turns out that you were actually right about that the company just wasn't able to ultimately raise the capital to see that strat play out. What's your take on those early entrants, and like do you think MedMen could have worked out if they had a better management team that could have maybe navigated the capital raising side a little bit stronger?
Yeah, I don't think capital was the problem. If you look at their SG&A, they had plenty of capital. And I don't think management necessarily was the absolute problem. I think one of the things I saw early on that I highlighted, which probably, if you were trolling me, I don't really remember, because someone told me when I started tweeting, which we as a company we just felt like we really wanted to get some information out into the space, was just kind of ignore, if people want to have a discussion, great, but if they want to, there's going to be trolls, and just don't react to them. But one of the things we saw was we had met MedMen early on, and we thought they were passionate guys. We didn't necessarily think they were going to be the best growers, because we thought that was a much more CapEx intensive strategy than retail per se. Mm-hmm. So the one thing we didn't really love was the IPO, the prospectus. We didn't really like the capital structure. So it wasn't about the amount of capital. I think it was the alignment of shareholders and management that we didn't really love. And I think whenever you see a situation like that, it doesn't matter how big a company, how successful it is. We're an investor. Obviously, we build companies and we invest in them, so we understand bringing in capital, and we try to align those interests. We think companies work best when there's a 100% alignment between shareholders and the people operating companies. So it wasn't necessarily that we said the company wouldn't work out. We just felt like shareholders weren't really getting as good a shake as they deserved. So I think MedMen, the retail heavy strategy, could work in a different world. I think when they started to branch out to limited licensed markets that required a much more focused, capital-intensive strategy, capital allocation. Now, I've said this a few times in the last couple of weeks. I definitely said it on Grizzle. Is nowadays, if you look at an MSO, you're making a bet on two things. You're really making a bet on the markets that they're in currently, but you're also making a bet on their ability to allocate capital smartly, wisely, acquisitions. Because operationally, the top 10 or 15 MSOs, the guys that are nearing $1 billion or close to in value, all have pretty stable operating frameworks. It really comes down to how well they're going to allocate in the future.
Yeah, my comment's really more on in the sense that we saw these runs in these Canadian stocks. Everybody was waiting for the first big U.S. entrant, and they were just burning tremendous amounts of cash, which perhaps could have worked out. Now, look, I don't know what it's like to go raise hundreds of millions of dollars of capital to try to protect your balance sheet against that burn. But it felt a little bit like every conversation I was hearing from anybody who could help them out and write checks was, we don't like these guys. Yeah. We don't want to write a check.
Yeah, I think, there's a whole story there around their first opportunity fund and the investment they made in MedRelief, which really kind of springboarded them into, there was an article once called the unintentional asset managers or something. And that's what they weren't that, but they had a fund, and the fund funded their operations. And I think, the thing is, we once wrote something that we never really released because COVID hit right when we were about to release this commentary called "Bigger Isn't Necessarily Better," or "Bigger is Better Until It Isn't." And, they tried to buy into limited license markets when capital was still inefficient and not really available in copious amounts. So when you see like a Cresco buys Bluma for 213 million, Cresco has the capital to build out Bluma much bigger, their footprint much larger. Whereas MedMen was buying to these limited license markets that were basically, they were buying pieces of paper that required another 50, 60, $70 million to spend. I mean, to this day in New York, they still don't really have a function and grow. It's essentially a temp grow. So when you look at how much you have to spend across all those markets, and they're building out this retail footprint, and you're talking about a retail heavy business which has inventory rollover, you're just not going to have the efficient capital you need to really build out. So I think they were ahead of their time, but I also think the concept of buying into all these limited license was a tough slog in 16, 17, 18. And I think, it just wasn't matched well. Whereas now people who are buying into limited markets are buying assets that are functioning and in large part profitable. So it's a much different acquisition landscape now than what MedMen was trying to do.
Okay. So something I like to ask people like yourself that actually deploy capital and invest it into operators is, the cannabis space, there's clearly all sorts of different characters you run into, where I'm sure you see thousands of investor decks, some of them very early stage, that you guys probably have some chuckles at. How do you go about doing your diligence when you're looking at an operator?
Well, there's a lot of ways. I mean, first of all, we build operations ourselves. So we've been a de novo license winner several times, and even before Merida, we did that. So we have a pretty good understanding of each local state. We have a very good idea of the idiosyncratic laws, but we're always trying to keep ourselves sharp. So I'll tell you a funny anecdote. Merida internally, I would say we have an incredibly rigorous process, internally discussion process about how we look at things. And Virginia was one example when we bought Dharma we really were making a bet based on Virginia's progression, the fact that there were only a few operators in that market, but we had done a really deep dive on legislative process, and we thought we understood that it could go rec well before anyone was predicting. I think we were talking about it in mid-19 when most people didn't even have Virginia on the radar until they heard that Governor Northam was maybe thinking of passing a law. But so we got this 150-page prospectus or deck, or I don't know what you would call it, because it was long and laborious to even go through. And I got like 50 pages in or something, and I wanted to test the team and see how sharp and how honest, whether we were having intellectual discourse. And one of my original partners, Jeff Monat, went to Wharton, has been a long-short equity analyst forever at hedge funds. And so over the last 5 years, 6 years, he's obviously developed an incredible expertise in cannabis as well. So I sent this prospectus to, I don't know, all 25 Merida members. We have 18 people on the investment team. And I sent everyone this thing. And I said, it's Friday night at like 8 o'clock. I said, I want everyone to read this. And I want everyone to answer in one paragraph or less why you would do this and why you wouldn't. And then I want a recommendation. So Jeff calls me. I'm walking my dogs after I send this out, and then I go to walk my dogs. It's like 10 o'clock at night now, and he calls me and he goes, this thing is awful. He's like, are you joking? Do you really want a recommendation? And I go, no, but I want to see if everyone's going to read it and what happens. Within 3 pages, I expected my whole team to know that this was absolute dreck, and that, that while it was an intellectually honest project, which half the people did, a few people did say to me, what are you thinking? Like, we would never do this. I mean, it was basically like it felt like a Sanskrit written star chart. Like there was a chart on the 3rd page that should have absolutely killed the process right there. It just made no sense. There were like 50 entities. I don't even know what they actually did. I mean, I was 50 pages in and I still wasn't sure what they were proposing. So it was kind of great to get these recommendations. I mean, one guy was like, I think they have to like focus. I got some good answers from the team. But the point is, I think you have to do a lot of things in cannabis to keep the intellectual rigor, to keep people on their toes. And hopefully I've had enough of a personality. I think I have that personality to keep people, we always joke around that we don't really have I'm not anyone's boss. I'm just kind of I lead by example, and I dig in pretty hard myself, and I expect the rest of the team to do that. But it was kind of nice to have one of my partners call me within 5 minutes and tell me how awful he thought it was, and that this was an absolute wasted exercise, because I actually agreed. But it's always good to, do those kind of things, because I want to see what people would think. These 150 pages were awful. I mean, it was really, truly terrible. And so that's kind of what we do to stick the diligence. But in terms of real diligence, I mean, but you need to look at the negative and the bad sometimes to try to extrapolate lessons that you can use going forward. So we actually use Sometimes we'll look at a deck and say, like, what's the one thing that's really holding us back from doing something in this company? And then we try to do that. But really, our diligence, this is going to sound kind of counterintuitive, but we actually try to keep diligence very simple. We're looking for areas of the space that are going to grow disproportionately from the normalization of cannabis that comes from the transition from an illicit to licit market. So we're actually looking for simplicity instead of complexity. Now, there may be complex things that have to happen internally or structuring all those other elements, but we actually look to create margin of error by looking at areas of the space that we think are either just misunderstood, have a tremendous amount of opportunity, and have disproportionate growth vis-a-vis other elements. So, there's areas that we avoided early on. Branding. Why? We just felt fundamentally that how can you pick if a brand is going to grow disproportionately versus another brand? That's just armed combat, right? That's just fair, even armed combat. We don't want to do that. We want to find an area of the space, like, for instance, when everyone's doing branding, we were doing the packaging. Or if everyone's focused on branding, we're looking at other elements of what do brands need to grow? Which states are they going to grow in? So everyone's focused on branding, but there's really only 4 or 5 states that could have branding originally, right? There's no branding in New York. There's no branding in limited license medical markets. So we tried to avoid those elements because ultimately then that person just has to outrun their competitors. And I'm not saying that you can't win and make a lot of money doing that, but our methodology, the returns we're looking at, we really try to look for disproportionate growth, misunderstood growth, friction removers, not companies who are going to go headlong into friction and see if they can just navigate that. That's for other people to do. We really are looking for special stories and special areas of the cannabis industry. So like our next thing is either medical data or the medicalization of cannabis. It's just an area you can tell there's just not a lot of big investors talking about that. And we find that intriguing. And we're not looking for consensus. We're looking to lead consensus, if anything.
So a lot of questions from that. But a simple question is, early on, when we started hearing, medical and then recreational, a lot of the medical companies were just recreational companies with a medical license. Where do you see the medical market heading in, 5-10 years when most people are able to assuming most people are able to access recreational cannabis?
Yeah, I think you're going to have like a traditional medical market where, you may have like when you look at someone. I've always been intrigued by these healthcare models I've seen because in New York you get a lot of this where people have home care, and there's one guy that manages like 500 home care workers, and I've always dug in on other business models that really are adjacent to cannabis or have nothing to do with cannabis, just to understand what these look like. And I think after doing that for 20 years for family offices, for my corporate career as a lawyer, you just look at so many things that you start to get a sense of how the let's call it the messy elements become more defined. And I think one thing you'll see in cannabis is going to be like a hardware market. Like there's going to be form factors that are specifically reimbursed at higher rates. So I'm not sure if flower will be reimbursed the same way. I'm not sure if like United Healthcare is going to want to reimburse someone for a pound of cannabis, but they may want to reimburse for a special formulation that allows a workers' comp worker to reduce his absenteeism, or for a union worker who instead of taking opioids can now use CBD or a low THC solution at night to sleep. Reducing absenteeism, increasing sort of efficiency. I think that's an area that's going to be wildly intriguing. And I think the formulations you're going to see out of, let's call it like the cannabinoid-based medicine, it could be CBG, CBN, other elements of cannabis. THC is obviously going to be an element because it really helps for sleep and other and appetite. We saw a study recently, which I tweeted about cannabinoid-based medicines as being a prelude to using chemo because it helps with neuropathy. Look at treatments that people take when they take chemo or opioids. There's medicine you take for opioid-induced constipation. So opioids need other medicines just to mitigate the effect of opioids on your digestive system. So I think you're going to find a lot of areas where cannabis can be an ameliorator of certain conditions. And that's when you're going to see sort of a specific medical vertical, which some of the MSOs will participate in. And then you're going to see a very defined medical vertical that I think is going to be more pharmaceutical. And then you're going to have an OTC market, which I think MSOs could easily have. Like, I know a bunch of MSOs have launched CBD brands, and they're trying to figure that out. And I actually applaud that, and I think it's a great idea. Now, no one's really made a lot of money in CBD. Even Charlotte's Web has had its challenges over the last year. But I think when you look at like a GW Pharma being bought by Jazz Pharmaceuticals, you really do look at what happens in the future when pharmaceutical companies are going to pull this plan apart and really dive in. And I think, like you said it before, I mean, I think I've said those words before about a lot of them are just rec operators who happen to have medical licenses. That's fine. And I don't think they need to even go into the deep medical vertical in the future if it's legal and it's a recreational consumer product. I mean, there's going to be enough business on the consumer product end where if no one who's currently operating wants to be in the medical vertical, it's still going to be an amazing business. But I think the medical vertical will be north of 100 billion over, maybe 3 to 5 years, just simply because of how many conditions are going to need this disruption to really change the face of how opioids are not maintenance drugs. They just aren't. And we've been using them like that for years. And a lot of people's lives have been ruined by that. And I think I'm excited to see the beginning of the cannabinoid-based medicine and what it's going to do for people. I think it's going to lead to a tremendous amount of quality of life. And I think there's a lot of operators currently operating. There's a few. I mean, I'm talking to one in particular that I think has a medical bend that really excites me. I haven't done anything there yet, and that's why I can't say anything. But I think there's a huge opportunity in that vertical just because there's not going to be a lot of people early on who can serve it. So that's exciting. That's exciting to Merida generally. And I think that's exciting to other investors. When we talk to investors, either privately or publicly, they do get excited by the fact that it's clearly not an area that's it's not a path that's well tread. You know the old pictures that they show, like difficult decision, hard to make, and there's like one person and easy to follow. That decision map they have on trading. It's like easy to follow, but may not make money. And there's like 1,000 people on it. And then there's like one guy on the hard path. And we don't mind being the hard path. I think we've earned the right with our investors to sometimes be way in front of consensus.
So you think there's still such a thing as early mover advantage within the cannabis space?
Yeah. Oh, in certain verticals, absolutely. I mean, I think there's going to be emerging verticals that we haven't even thought of yet. I mean, I have some ideas. Maybe it could be around loyalty products or brand development. So I still think there's absolutely a fair amount of early moving. I mean, it's kind of funny to think that we think the early mover has gone away in an industry that's not even federally legal.
Absolutely.
So, it's amazing. I think in Canada even there's an early mover advantage for people. Look at some of the products that now are emerging. It's kind of amazing that it took 2 years of kind of chaos, but you're finding a fairly robust Canadian market. And then you have Europe, and then you have, Europe, EMEA, and other places that are really slow to move on the laws. And look at Mexico, right? I don't know why people think Canadian LPs are going to be the winners because of Mexican licensing, but I would actually think a lot of the people who are in California, it's an easy transition. You just go across the state line. A lot of stuff transfers from Mexico into California. I don't know why people think California operators wouldn't try to help Mexican local partners. And I think you could see a pretty big land race there over the next 6 to 8 months as people line up to partner there.
So how much thought do you guys put into, I think I already know the answer to this question, but the risks that the regulatory path has for investors? Like something that I think about every now and then is, let's take Florida, for example. What happens if 7-Eleven's allowed to carry recreational cannabis products, and what impact does that have on the competitive landscape? What do you view as some of the risks that if a regulation works out this way or that way could really mess up your thesis?
Yeah, I think one let's start with that first. I don't think our thesis is based on. I think we talk about normalization a lot more than we talk about legalization. In fact, if you look historically at Merida's kind of discussions with the marketplace, our colloquy with the marketplace, or the stuff we've written, we don't really talk about legalization being the endpoint. We talk about normalization being the endpoint. So we're invested in what we think is a normalizing landscape. We're not really so worried about the legalized component. Okay. I'm not saying we don't think about it and we don't study it, but going back to the legalization component, I think you have to make some calculated risk. But the systemic risk, it's funny that systemic risks were, people say, well, what if it is made more restrictive? That used to be the answer, the question I used to get in 2013, 14. Why should I invest in something that could evaporate overnight if the regulators decide to clamp down? Now I have to answer questions on what happens if everything becomes open. And I think when you think about those changes, you start to sort of evaluate things from, am I invested in companies that will thrive in this landscape? Which is why I said we spend a lot of time thinking about where is the disproportionate growth in that type of landscape. So if a 7-Eleven or let's say every retail location is allowed to consider cannabis, a regular product. Now, I want to make the point that, like alcohol, intoxicants are typically thought of differently. 7-Elevens don't carry liquor. They carry beer. I'm not even sure they carry wine. So there are restrictive categories that you're going to find with certain stores. So I'm not sure cannabis will ever be seen like, it could be, if it's seen like liquor, then you're not going to find it in 7-Elevens. You're going to find it in defined stores still. But that might be a negative to, obviously, a retailer. However, if we're highly tethered to product creators, brand creators, and other supply chain, 7-Eleven's got one of the most evolved supply chains. Anyone who looks at 7-Eleven's business model, the way they get food onto their shelves, they're a very progressive business when it comes to supply chain. And again, Merida does a lot of work on other areas of supply chain that have nothing to do with cannabis to understand what normalization looks like. So when you say, like, how much thought do we put into it? I would say an enormous amount of thought. Like an enormous amount of thought into what the normalized landscape looks like. And that's why legalization isn't it's not this riddle and the sphinx. We don't find it enigmatic. We find it much more an endpoint that we think is going to happen. So we're investing in things that work today, will grow disproportionately on the way to normalization, and then just explode in normalization. So I think 7-Eleven, if they carry it, it'll be then we're very well exposed to brands and other supply chain companies and other producers. You're still gonna have to produce raw product. I just don't know if we're gonna get to that place very quickly. Remember, you're not investing for a 100-year horizon. Most of us will be dead by then. So I think you're investing for the 5, 7, 10 year, and that's why we're focused on some deals that can get liquidity, and then you can recycle that capital. We're looking for a virtuous cycle of ecosystem development that disproportionately grows as cannabis normalizes. That's like the best way to, that's the pithy way to describe what we do. And then the amount of thought that goes into those individual elements is really where we think the magic kind of happens.
How do you guys react if you are invested? You guys sound like you're pretty active investors. You chat with your management teams regularly. Have you guys ever found yourselves in a scenario where one of the companies you're investing in, you've seen some of that insider self-dealing that you didn't like? How do you guys approach that scenario? And if you have, how did you deal with it?
Well, there's definitely been, look, I've been in the space for a while and have dealt with some unprofessional people, professional people who blew me away with their innovativeness and, grit. I think you run into that in an entire spectrum of people. What I would generally say is we try to be pretty slow to anger and pretty fast to solutions. We try not to inject too much drama into situations that just need cool-headed repose. So we have seen a few situations. Look, not everything's going to work out, especially in an early emerging space. So one of the things we try to do really during diligence is what you asked before, is we do personality tests on all of our companies. And so we really try to get a defined sense of how a company is going to react to certain scenarios. And so we do tend to identify these misalignments before we even invest. And we're typically not an investor in those type of companies. But there's been a few times where we've seen, we've seen actions that we don't feel like are governance focused and investor friendly. And, I would say we act firmly, but reasonably, right? We're not looking to implode anything over something, but in general, we look for solutions. Blame doesn't seem to be something that we're highly focused on often. Okay. If someone, if a company did a self-dealing action, we're typical. We typically identify that well before we've invested, and that's just a company we avoid. But one or two times we've run into some situations where the business runs into a brick wall, maybe not even through the fault of operators. And we try to be supportive. That's one of the reasons why we have this ecosystem of 60 companies and relationships across every company, we hope, that where we can find a solution that leads to some level of harmony or value creation. But you can't win them all. Unfortunately, it'd be great if you could, but we've run some situations, and our typical response is, what I would say is we're like the Marines, no better friend, no worse enemy. We haven't really been in a lot of adversarial situations. There's one situation in general where there's a few lawsuits firing back and forth. You can't do something. If you're dealing with someone who's just a lunatic, what are you going to do, right? Sometimes you don't discover the lunatics until well too late into the into the situation. But that's why we have a very defined personality test that we run companies through, because at worst, at least we know what we're getting from a partner. Because we don't really look at companies as just investments. They're really a reflection of what you want to create, what you want to do. So we're pretty slow investors, actually. I mean, there's some companies that we're investing in now one company in particular that is related to home growing and is sort of a self-contained unit for home growing of cannabis. I mean, I think I originally saw the company in 2015. So we don't mind, letting FOMO pass over us sometimes, but sometimes you're going to miss a great deal because of that. But at the same time, you're rarely going to run into just an absolute unknown situation if you've been watching someone operate for 5 years.
Mm-hmm. So you guys look at a lot of data. How much of the current, like let's just take I don't know, like a Curaleaf or Green Thumb or whoever. How much of the sales right now would you estimate, and I don't know if you can give any kind of an estimation on this, is like, say, the soccer mom who's kind of new to cannabis, that's becoming more comfortable with it, becoming legalized or heading towards there, and how much of it is the 20-year cannabis smoker that is going in and saying no to their previous supply?
Yeah, I don't want to stomp too much on my next commentary because I'm literally in the process of this, but I'm going to use two examples of things that we've discovered. First of all, New Frontier does a great taxonomy of those types of analyses. So one thing, like I remember looking at one of their analysis like a year ago and seeing like minivan matriarchies. And I'm like, that's an interesting way to describe like what you're saying, like the soccer mom, right? That's the minivan matriarch as a purchaser. And I think you can look at products first of all, it's crucial to understand that data as we go forward. But I think what you try to do is we're looking at forms. So, one of our portfolio companies was telling us that in California, they're seeing a fair amount of large packaging orders. And so when you see a dispensary ordering, half-ounce orders, that's not a casual new to the game consumer, right? Because that's a fairly large amount. When you see concentrates, dabs, and tarantulas, which are pre-rolls that are rolled in either oil and then dipped in kefir shatter, that's not the casual guy. Someone consuming that is going to get extremely high, right? That's someone who's built up a tolerance to cannabis and is looking for more phase that they can get from existing products. So, and the fact that everyone's chasing THC, in California tells you that California is now seeing that shift. So I think when you look at California as opposed to other markets, it's only fulfilling 40% of its legal market at best. So we have looked at a tremendous amount of data. So the one point of data I want to point out is, you look at Oregon where sales have absolutely spiked, but there's a chart that we saw that we basically gave a research project to 4 or 5 people that were vying for roles at Merida. And, they came up with some amazing research. And one piece of research was that in Oregon last year, while sales have doubled, the amount of THC concentration in wastewater has not moved at all. So if people pee their THC into the water, if sales are doubling, you would expect a lot more THC to be found in the wastewater. Yet THC is flatlined, yet sales are going vertical. So that means that people who have already been peeing THC into the water are still peeing the same amount of THC, but sales have exploded. So that's all legacy transitioners. So, it's a tremendous amount of that's a tremendous piece of data to understand that you're going to see sales spike. But, Illinois, great example. Illinois had the lowest percentage of dispensary visits out of any legalized medical market in 2016, 17, 18, largely because of fingerprints and other things, right? So they were out of the, call it 50,000 people had cards, only about 40% would go into a dispensary on a monthly basis. Well, but their basket size was 4x the size of every other state. So what are those people doing? They're probably buying, and they were helping out their friends who didn't want to go through the process. So I think when you look at that, now the rec market turns on, and what happens? Vertical sales. So I think there's a lot of evidence of this legacy transition, which to us is the next step of growth. And I think that's the most exciting thing, is that we're looking at markets like New York, Virginia, Pennsylvania, New Jersey. These are all going to be driven by legacy transitioners into the legalized adult use markets.
Okay, well, Mitch,
and you know what? Those people use a lot more. That's the 6-pack drinker who's drinking a 6-pack a night. That is going to absolutely be the next vertical steps. So anyone who says that the MSO trade is going to flatten out, it may eventually, but right now they have a tremendous amount of verticalized growth in front of them for several years.
Mm-hmm. Now, I know you got a hard stop at 12:35. Yeah. So thank you so much for joining us.
If you want to throw out a Hail Mary for me.
the Hail Mary question that I wanted to get to is, what's the biggest myth that cannabis investors tell themselves? You read on Twitter, on social media, that, for us, it's a
tough one.
Yeah, go ahead. Let's hear it.
What's yours? I'm curious. I'd love to hear what you think it is.
I think it's Europe and Germany.
Yeah.
Wow.
Yeah.
I'll make in order to keep a great relationship with Boris Jordan, I won't say that. But no, you know what I would actually say, and I think this is one that it's just been so long, but I would say that that it's all cash. And that there's no banking. I mean, there's more than 500 FinCEN approved banks who are doing cannabis related business. It doesn't mean that the Safe Banking Act won't be a tremendous boon to the industry, but and cash is an issue in certain places. But the concept that someone walks into a Maryland dispensary and is only using cash, or that someone is only using cash in California, or that's not true, I think, and I think that started to shift. So I think that's one tremendous myth. That's more of a legacy myth. But that's a big one that I still get those questions in investment meetings, and I don't think it's very true anymore. I mean, having built a lot of these limited license operators, clearly we're still people are using debit cards and stuff. But and I think the other myth is that everyone benefits identically from legalization. Again, I don't think legalization is as important as normalization. I think certain companies are built better for the normalized world. And I think the concept that we flip a switch, it's legalization, and every company benefits identically is going to be something that is going to be a balloon that people are going to watch pop in their face. Every company, public, private, doesn't matter, is not going to benefit identically from an eventual legalization. It's just not going to happen.
Yeah, I see the limited license states being probably the worst off in those instances.
I mean, I disagree. I disagree because I don't think rules change very quickly. So I actually think the niche operator in very liberal states could get crushed because it just becomes like a massive land race and CapEx. Then it's capital efficiency, like I said. Then it goes to capital allocation. And I think companies who have a distribution and a perspective on brand development and have the capital to develop quote unquote national brands may benefit. But no, I could see why people have the perspective that limited license states, it becomes legal, you've built this huge moat, and that moat goes away overnight. But anyone who thinks legalization is going to create state-based changes overnight is also that might be the biggest myth, is that legalization just drops all the walls. Mm-hmm. I don't think states are going to have spent all these years to build up infrastructure and also a local business that employs a tremendous amount of people and are just going to watch it get washed away overnight. I think you're going to watch a 7 to 10 year kind of unwinding process as this country figures it out. And so, not to be adversarial because
it's fine.
No, but we totally look. Respectful disagreement is a hallmark of Merida. Public, private, it doesn't matter. I love the back and forth, and I think it's I appreciate your perspective. I think that you might have just highlighted what I think might be the biggest myth. So, no offense, but no.
It's all good. I know you're running out of time to debate it.
That's an interesting thing to look at. I just don't see states just going, we spent 10 years from 2009 to 2015 studying this. We created industry in 2017. We finally went the full. New York's not going to create a legalization, have a 4-year fight, and then literally turn around and go, you know what? Let's let everyone import, 5 billion pounds from California. I just don't see it, and I don't see the companies that are on the ground there who have the money to spend locally to make sure regulators don't feel that way. I just don't see it unraveling quite that way. It doesn't mean it couldn't happen, but I don't see it happening quickly. And remember, smart companies, one thing that I would highlight for everyone is smart companies who have capital typically react pretty well and can adjust to whatever the rules are. So that's why understanding the corporate mentality and temperament is that's how you pick the winner, right? It's not just where they are today. It's how are they going to react when things change. And when things change, typically the nimble and the smart are going to be ahead of that curve. Great changes actually hurt the little guy way more than great changes hurt the big guy.
So you're anticipating states' rights still plays a large role post whatever legalization event occurs?
Look, the next time you have me on, we can talk about Henry Clay and nullification from 1850s United States. But I don't think anyone wants a history lesson right now. But suffice to say, I was a history major in college and can talk a lot about the lead up to the Civil War. Yeah, I think states are still going to have a great, because they spent so much time doing it when it was illegal. They built up the muscle memory of dealing with the federal government on this, I think.
Okay. Well,
fair assessment.
Mitch, thanks so much for taking the time to come on. Hopefully you'll come on again. We could listen to you talk all day.
Thanks so much.
One of the OGs of the MSO space, which I've always found interesting, real EBITDA, real cash flow, unlike what we saw in Canada. So I really appreciate you hopping on, and hopefully we'll get to chat again.
All right. Thanks a lot, guys. Hey, great show. Love watching it. And thanks for having me.
Thanks, Mitch.
All right.
Okay. So that was fun.
Yeah, it's a lot of information there in a short amount of time. I feel like we were quite crammed in there, but that's all right.
Yeah, well,
you gotta get all that good information in there, right?
It's interesting. Like there's a lot of thoughts that I would have liked to have gotten into, but I couldn't. And a lot of those are things along the lines of investing in private cos early on, and
absolutely,
because and then there's a whole element of you want to pick horses that are going to work on a public market side so that you can, liquidate some of your position, because you invest in these things. If they're not giving a dividend, you need some sort of like cash flow mechanism or exit strategy. So I'm curious how they think about that, because we're surrounded by a lot of like characters in the Canadian public markets. And it's funny, last night we had a staff meeting where we just came to the realization that there's small cap deals that Schedule 1 banks take public. And it just kind of shows our world, where people think more about public markets. What does the retail investor, the butcher, the baker, the candlestick maker care about? What do they want to invest in? And I wonder like how much thought goes into that, right? Like they may see a deal that's like an IP deal that comes across their desk that they find really, really interesting. But like, it's like, this thing might never work because it's too complicated to understand. It'll never work from a public standpoint. We're just going to have to sit on this thing and hope that they prove out whatever they're trying to prove. And it's massive. Those are the questions I wonder when I talk to guys like Mitch.
Yeah, I mean, Mitch certainly has a lot of insight that is useful. The whole private to public, right? You just like you said, you need to be able to recycle that capital, because if you can't, the fund is effectively dead in the water. Even if you have great holdings, right? You still got to be able to pay your people at the end of the day, right? But yeah, we didn't really get the opportunity to get into it just because we were keeping such a macro level, which is fine. And I mean, personally, I hope Mitch comes back so that we can delve in a bit more to the micro level.
Yeah. So let's take a little bit of time now. You see, I got my screens back on. They turned off on me back there. This is all new. This is all this set stuff. Remember when we first started this show, I was just a guy with like a $30 webcam.
I missed the elliptical.
the elliptical that I spent more time setting up than I have actually on it. Okay, so what's going on today? There's lots of stuff in the news. Jay, what's where?
Yeah, take your pick. Do you want to go macro? Do you want to go micro?
Let's start off with President Biden. Biggest federal tax hike since 1993 in the next major economic plan. What can you tell us here, Jason?
So, if you give me a second here, because I quickly edited that while on the phone earlier today.
You edit on the phone?
All the time.
Really? Look at you.
Actually, it might have been last night during our group meeting here. Oh, there you go. You got it up. So the short of it is the stimulus bill for $1.9 trillion has been completed, as we all know. Checks have started to go out, and Biden is already focused on his infrastructure bill. However, the infrastructure bill, he doesn't want to fund explicitly with paper created out of thin air. He's going to fund it from the people. Largely what it looks like is they are going to tax high income earners. So anyone earning above $400,000 per year, They're looking to tack on several different forms of taxes. I think some is capital gains, some is just straight income, and on and on. It's looking to fund this infrastructure bill without creating more money. I think the creation of money is still going to occur, but they're trying to offset it partially. They're looking to recoup $2.1 trillion within the span of a decade. So, I mean, I don't imagine that any infrastructure bill is going to be short of $1 trillion. So, where's the funding going to come from? I'm guessing more money printing.
Okay. Well, I don't really have a whole lot to add to that, other than I'm surprised that Biden would be so bold as to suggest actually taxing people as opposed to just printing more money. Does he not know that this is 2021, where money grows on trees and it's all just a simple fucking journal entry? I'm trying to stop swearing, and I apologize there, Jay. I just get really fired up when it comes to monetary policy and central banking.
Maybe it's related to your tweet about how you can't just print lumber anymore.
Our buddy Michael Miller likes to joke, and I don't know if he wants me mentioning his ideas. Who knows? Maybe he's working on a deal. So I probably shouldn't have mentioned this, but that it's only a matter of time until we see our first lumber company goes public via SPAC or that in Vancouver, where all of these like micro cap and like deal guys, they're all sitting around going, "Ooh, remember that failed lumber company that Johnny from grade 6's dad had?"
Well, where's the lumber coming from?
BC. In the family.
Yeah, it's not as sexy. That's the issue. It's not as sexy as cannabis or psychedelics or anything else, but it's a very valid point. There's very few public companies that I know of, at least.
We've got
deal in the space.
Apparently, New France has a COVID variant. New France.
New France. Yeah, France has a new.
They've traveled into the future from New France, and they brought us a COVID variant, proving that it didn't come from the Chinese. Came from New France. No, I assume that he means that there's a COVID variant out of France. That's great. That's just thanks Argo N.
If it makes you feel better, here in Regina, I think about 90% of all new COVID cases are actually these new variants, largely from South Africa and Britain, which are supposed to be worse. But that's something unrelated, I guess, because markets don't seem to give a shit about COVID anymore.
There's a COVID there's a COVID related name where we're talking with the CEO. I'm not going to say who it is. I'm not going to say it, but he told us that he was going to put a vaccine in his company. It's like a $20 million market cap, micro cap, and it's like, sure you are. Sure, there's going to become a vaccine available, and they're going to let a Canadian micro cap CEO of a bunch of previously different sectors, they're just going to hand over that vaccine, and Trudeau's not going to get involved with a potential vaccine in a country that desperately needs vaccines. I shouldn't say too much more, or else I'm going to trip over something.
Oh, you are. So let's change the topic.
And I'm going to
let's take macro for a second. India yesterday announced that they're considering banning cryptocurrencies. I believe Bitcoin fell 10% right after this news. And as proof of how hard our staff as a whole works, Hermina sent this to me while I was in a meeting with her, which she was participating in and talking in. So,
was that last night's meeting?
Yes. Yeah, she sent it over in the middle of it, right after she had finished talking about some stuff she's working on.
We had a staff meeting last night at 10 p.m. We had 10 people in the meeting. We're growing.
We're growing, and that wasn't even our full staff because that's largely for video.
Yeah.
But so they're mulling a complete ban with anyone found holding, mining, possessing anything related to cryptocurrencies, expected to get a fine if this legislation actually goes through. I don't know that if it's actually been drafted as legislation, if they're just trying to talk big right now. But it definitely has a profound impact considering that India alone has a significant portion of the world's population. I think they're over $1 billion, are they not?
Yeah, something like that. I think 900 million. I don't know. Yeah, look, I think that this is a really big risk. I don't know. I actually find this NFT stuff really interesting, and I think that there's going to be marketplaces where people start trading stocks in like physical things. Like
Maybe I'm too old. I don't understand the draw to NFTs.
So here's where I think it gets interesting. If somebody successfully creates such a marketplace, let's say you've got a Babe Ruth baseball. Remember the movie Sandlot? It's fantastic. If you're bored today, go watch it on one of the platforms. I'm sure has it, probably Netflix. Let's say a Babe Ruth signed ball is worth $250,000. This is verified. This is a Babe Ruth signed ball. Let's say that you want to own a piece of it because you go, I can't afford a $250,000 ball, but I believe that those balls are going to be worth something someday. So somebody who's got a ball says, you know what? I am going to sell this to some sort of third-party exchange. They're going to put it in a vault. They're going to sell these NFTs as tokens, and people can own a piece of a Babe Ruth signed ball. So that's kind of where I see that. That's where I see the space with NFTs heading. Now I'm kind of thinking more along the lines of physical and digital assets. So it could be like, hey, I want to own the song "It's Friday, Friday, Friday" by Rebecca Black. I'd love to invest in that because it's a cool song. Every time I hear it, I get pretty happy. I'll buy 5% of the song for $5,000. Why not? It's a piece of history.
So to be clear, if you own the rights to a song, I can see the justification for that. But something like a Babe Ruth baseball, well, I can see that you're trying to say that there's going to be growth in value. I get that, absolutely. But in theory, the reason people invest is because they want access to future cash flows.
That is where you're wrong, my good friend, my trusty sidekick. Today's market is all about speculation, and there's so much capital just flooding in cash, just floating around. Everybody's a speculator now. Cash flow don't matter. Fundamentals don't matter. You know what matters? It's going to go up.
You know how much of an issue I have with stuff like that, right? Like at the end of the day, the theory behind investing is you own a piece of a company that's going to generate you something at the end of the day, right? I know that's not the world we're in right now, and that's why NFTs make sense. My issue with NFTs outside of what I've already stated is I see it as the easiest route for money laundering in the world. You thought Bitcoin was easy? Like, sure, it uses Bitcoin, but consider this. Okay, I'm selling this random-ass tweet I made, and it goes for $3 million. Who the hell is going to pay more for some random tweet from some random guy? Like, it's just the easiest way to go, oh, yeah, there was no illegal exchange of funds here. I bought this tweet for $3 million.
I'm going to quote Rick Rule, who once told me, "You're precisely wrong." Who needs that when you could just go into a Vancouver casino and launder money? We've already got those mechanisms.
Because now you don't even need to get off your ass. That's why.
Yeah. Look, I agree. That's an interesting thought. The one thing I will say though that creates some issues with Bitcoin is early on a lot of the arguments where you want to be in this asset class because it's private and nobody knows and who's transacting it, and it's like there's actually like it's a public ledger. It's totally traceable. So that's not always the case. So I don't know enough about NFTs at this point technically to speak to how easy it would be to launder money. I suppose that the devil's in the details, as they say. Let's go on to something else here. A name that we're in, Interactive Games, announced a strategy for U.S. online gambling. That's supposed to say Mark It.
I think you ran out of space.
Oh, okay. Well,
because it's right across my screen.
Yeah. Okay. Well, look, I'll take it down for a second. But what can you tell us about this news?
So basically, IGT, as they're more commonly called. Right now, they've got some assets going on in in India for sports betting, fantasy games, etc. Basically, now they're looking to expand to the U.S. as the U.S. opens to online betting, particularly with an emphasis on sports. So, I believe it was last year the U.S. made a ruling where online gambling was now allowed. Previously, it was not, for those of you that didn't know, and it's basically a state-by-state issue at this point in time. So basically what Interactive Games is looking to do is partner with what they call land-based casinos, as in physical casinos that you can walk into, throw a 10 down, and spin the wheel or whatever you want to do. Basically, they're collaborating with them so that they can create an online presence. The way it's described almost sounds like a white label deal for their tech, and just enables these companies to get into the market and online. But I imagine that they're involving themselves somehow, because they do have quite the experience in terms of gambling and everything else. So
yeah, they've got some of the guys from Bodog, I believe, behind this company. You've done some betting on Bodog. I'll admit it. I have. And you know, the problem with online betting is no matter how far I get up, I just keep betting till it's all gone. They always get my money because why do
you think they do it? You can't just walk out of the casino. You actually have to physically go. You have to plug in your PayPal, send it over. Most people are just going to go, I'm good for today, but I'll just leave it here in case I want to gamble on the game next week.
I once had that strategy, and there's a name for it, where you keep doubling your bet every time you lose, and that way you recoup your losses. And
that seems foolproof.
Eventually, you're going to win and get back to even. So I took I was in like university at the time. I went to University of Ottawa, and I remember betting. For me, it was a lot of money. I think I put $2,000 aside to do it. Hopefully, my parents aren't watching the show.
I hope your phone rings like right now.
I remember I put like $600 on the Cowboys versus I don't know, maybe the Cardinals, and I was like, okay, Drew Bledsoe was playing. Like, they got to win. There was one play that cost them where Keyshawn Johnson was walking towards the line of scrimmage as the whistle blew, which is a legal forward motion, and he's been playing football his whole life and did that, and I was just like beside myself, screaming that that ultimately put an end to my scheme. Now the reality is that I probably would have, even if I won that bet, I probably would have ended up
losing it elsewhere, because
that's the gambler's fallacy, is you think that just because you keep losing, you're more likely to win the next time. It doesn't necessarily work like that. They are independent events. Ventry Point, here's a hot name. Ventry Point, this stock trades big time. We're long the name. I believe that they're a client. They put out news today. Jason Lutz, what can you tell me about Ventry Point?
We're actually incredibly long this name. So basically, they have a joint venture in China with, I don't know how to actually say it, Yushin Medical Shanghai. They've got a joint venture there with their VMS machines are effectively working in the country, but referred to as QMS. And right now, they are trying to get certification for use on COVID patients. So basically, in China, the regulatory bodies have determined that the right ventricular of the heart needs to be monitored in COVID patients. Why? Because COVID has been found to have significant impacts on the heart and among other parts of the body, even long after you're showing negative for the virus. And right now, they're looking for certification to be used in monitoring this. And if approved, to me, this would be a very, very significant news. Solely for the fact that we know how the pandemic has affected the world, and that there's going to be long-lasting effects. And if one nation approves the device for this purpose, I imagine others will really start to look into it and start monitoring in a similar manner, right? So I don't particularly know the specifics of the joint venture. I'll be honest on that. I don't know if it's 50-50 or what it may be. But regardless, if these devices do get approved for this purpose, I think it could be very, very interesting for the company.
Okay, let's change gears here. Sundial, fourth quarter consensus earning estimates. This is a piece from our main man, young Justin, the youngest man who knows more about iBanking than anybody I know. What can you tell us here, Jason?
Without you pulling it up, very little, I'll be honest. I can't remember the numbers off the top of my head.
I'm going to pull it up. I'm pulling it up here. My camera overheated again.
Sundial is set to... when are they reporting? The 17th, so tomorrow. Pre-market tomorrow morning, so we'll have coverage on that. We put out the consensus estimates about 20 minutes before the show.
Hey. Is that a price target of 45 cents?
The consensus is actually 39 there, buddy.
39 cents?
He's fired. What do you want?
He's fired.
The street high. That 45 cents target you're looking at, that's actually the street high. That's how high quality this deal is.
Do they know SmallCapSteve's in the name?
Yeah, that's probably why it's at 45 cents.
And that's why the stock's at $1.58, because when SmallCapSteve backs something, it moves.
So three analysts have revenue estimates. They're estimating $15 million for the quarter. That's consensus, of course. If you want to scroll down, average estimate looks like it's 71.24 for the full year. EBITDA is expected to be negative. So, no surprise there.
Yeah.
It's like you said, this company has effectively become a SPAC with a poorly operated Canadian operation.
Yeah, that sounds about right. You know who I saw threw up a business acquisition report the other day? Is Pure Sun Farms with Village Farms. Did you see that?
I didn't, but I'll be honest. Village Farms has actually been very open about the numbers related to Pure Sun Farms. So
they didn't make the kind of money I thought that they made.
No.
Like
what kind of money were you thinking? They posted earnings this morning. Actually, they were EBITDA positive, they were net income positive. So, but that net income positive was actually a result of a gain on an asset sale of $23 million. So,
well, I could pull it up if you'd like. If our audience is so bored as to want to watch us talk about a business acquisition report, so here, I'll walk you guys through the steps here, because I think that there's some good value in this for our audience. Let me change my tab here.
Your camera's working again. That's good.
Yeah, I'm going to have to turn it off again. It keeps overheating. So if anybody knows where we can hire a new producer, please let me know. I'm going to turn my camera off again so it can cool down a little bit. Okay, so Village Farms. You can see here I'm up on Cedar. I'm typing in Village Farms. Right there. There we go. And 9P for riveting television, by the way.
I hate that freaking verification.
So a business acquisition report, and this is something that I hope and pray that Curaleaf will file one on that. Whatever that thing.
Yeah, it's not going to happen, buddy.
So typically when a company buys another company, I believe that if the valuation that they pay is greater than 25% of the market cap at the time of the announcement,
I thought it might be 20%.
20, yeah, something like that. I don't know the exact number. They have to file a business acquisition report. And the business acquisition reports are very interesting because this is where we actually get to see the balance sheet, the income statement of the company that they acquired. So here we've got, this is for as of September 30th, 2020. We can see the balance sheet of Pure Sun Farms, and it's not looking too bad. Look at that, $100 million in current assets. A lot of it's, most of which is inventory.
Inventories, yeah.
Not a ton of debt. We can see that income statement there. Why is historical Pure Sun Farms?
So one's Canadian, one's US dollars. That's why.
Well, yeah. So pro forma combined. Oh no, sorry, it's pure. Yeah, okay. So we can kind of see there $10 million in net income. Now,
The net income is interesting to me solely because we haven't really seen that in Canadian cannabis anywhere. My honest take on it, though, is one, how much of that was absorbed by Village as is. I mean, we'll see if that 12.6 simply gets added with that 9.1 effectively, and that's what stays at going forward. Then we know that most of that was actually conducted by Village in the interim, considering it's a joint venture. However, if we see it decline, then it might get more interesting, right?
And you obviously know what I'm looking for. I'm looking for that cash flow statement, and I don't see one. They didn't have one for the quarter ended, which they had one for the year ended 2019, but they didn't have it in the quarter ended, which kind of like.
You're on it right there. What is this?
This is
2019.
Year ended 2019. So like they were losing money then.
So for the record, Steve is a huge fan of
hold on
cash
flow.
flow.
No, they were actually positive. They were positive.
Yeah.
Look at that. So
now, how much the cash flow statement? I prefer the income statement because I always like to look at their costs and shit, right?
Yeah, it's just in the Canadian microcap space and world, they're always trying to hide so much. That's just my quick way of saying, is this like the company's reporting a certain level of net income? Is it real or is it, bogus? And that's I just go straight to the operating line on the cash flow statement. And that kind of, to me, that's much more valuable than net income, where like, oh, they gave a bunch of directors options and then they canceled them and then they gave them back again. So they got hit with all these expenses and it's like, oh, who cares? So I'd rather know on an operating basis, is this company generating cash? That's what I care about.
Yeah. See, I also like to look at the
like EBITDA. You go straight to the MD&A and you look at the EBITDA.
Oh yeah, I love EBITDA.
That's a joke for you guys. I know Jay hates EBITDA.
I think EBITDA is a scam because you got to pay your taxes. Right? Like, to me, that's the first part.
Well, it's, especially too when you think about like these Canadian cannabis operators or cultivators. There's got to be a large depreciation and amortization expense when you're building these beautiful, gigantic facilities, right? I think.
Well, absolutely, right? The whole argument behind EBITDA, it's like, how can we make our earnings look great so that our stock price goes up? That's why, right? And I mean, the worst part is very few actually report EBITDA. They report adjusted EBITDA. So they adjust all this shit out. And it's like, well, it's a one-time event. Okay, but every time you have one-time events, so doesn't that just kind of level the playing field? Right? Like, I've always had such an issue with it.
Look, I don't disagree. Okay, so let's wrap it up here. I got a big afternoon ahead of me. I'm a busy guy working on big things.
It's a very busy afternoon.
What I'm actually going to write an article about SPACs.
Between all your meetings? That's interesting.
Yeah, that's my plan. That's my game plan.
Yeah, I see you booked a meeting right when I'm at the insurance place, so we'll see how that goes.
Yeah, well, yesterday my wife tried to tell me that she booked a meeting for me to meet with a mortgage broker because that's really how I want to spend my afternoon. But I literally was fighting with this camera all day, and I whipped my phone. One of those moments where I just it was like I was just so overwhelmed by the fact that my email box was filling up and I couldn't fix my camera. But I stupidly threw my phone against a ceiling, actually.
That's a weird target. I get the wall. I fully get that, but the ceiling's a different one.
I didn't throw it that hard, and it didn't leave a mark on the ceiling above me. But I thankfully didn't damage my phone because I don't know if you guys ever thrown your phone, but
oh god.
It's like this camera's been a bit of a pain for me, but we're getting better. I received a text message during this that we got to work on your set. So if you guys have ideas for how Jay should make a set when he moves into
I don't disagree. The reason that it hasn't changed is because I'm moving, so it doesn't even make sense to change my set. Right?
Yeah. But you don't have time to fight with our producer Chris over.
Oh, I'll find the time to fight. I've always time to fight.
No, it's like these cameras are like finicky mistresses, and they are not fun to deal with. So get ready for it. We're kind of thinking old timey newsroom, or do you want something like mine that kind of looks like I'm in a casino?
No, I like the old timey newsroom feel. I love the retro stuff. I think I'm gonna actually see if I can find an old style like stand up jukebox and put that in the back corner. Neon lights.
I love it. I love it. And Chris, producer, said that he was on the call when I whipped my phone against the ceiling.
You were talking to him, so you're.
Oh yeah, Chris and I, because the whole time it's like I'm like trying to get in between things and show Chris the screen because he's trying to tell me what to do, and then I'm literally like I'm trying because we got Mitch coming on the next day. I want to make sure I got my camera fixed, so I'm all stressed out about it. Email box filling up, meetings coming up all afternoon, and then my wife's like, "Hey, we're supposed to meet with a mortgage broker today." And I was just like, "Another meeting!" Ah! But you guys don't know, like it's literally 6 hours, and ultimately it was just I had to just uninstall the driver I was using, and then suddenly it started working again, which is fun. Okay, so Jordan, what do we have going on at the dive this afternoon?
So on the dive this afternoon, I had a window up. Let me find it because I was prepped, and I think I closed the window, so I'm not prepped. So on video, we have, I'm going to butcher this last name, and I'm going to apologize in advance, Chris Neville, the CEO of IGT, Interactive
company we were just talking about.
Yes. On top of that, we have some macro coming out talking about Poland buying. The central bank is intending to buy a whack ton of gold over the next few years, and young Justin last night prepped an article on CloudMD from the analyst perspective. So lots on the go. I gotta get a ton of company profiles scheduled to go out. I've got you in particular calling me 1,000 times a day about them, which is all fair and well. I just gotta get them out the door. So yeah, lots coming this week.
Okay, well, look, guys, I appreciate all of you who joined us today. You could have spent your last hour staring at any screen, any place in the world, but guess where you chose to spend it? Guess where they chose to spend it, Jason?
No idea, buddy. No idea.
They chose to spend it with us. And I appreciate that. I appreciate every single one of you. Those of you who put up with our technical issues and deal with us ranting about random parts of our life that we probably shouldn't be, but we do anyways. I appreciate each and every one of you. We got I don't even know if we have a guest lined up for tomorrow. It's just kind of fun. It'll just be a whole lot of this. So buckle up for tomorrow. But until then, enjoy the rest of your Tuesday afternoon.
And we are not investment